Ladies and gentlemen, welcome to the next edition of the Independent Speculator Interviews, or the Weekly Grill as I sort of think of it. Our guest today, or our victim, is John Lee from Prophecy Development. Now, I've known John for some years, and Prophecy has quite a storied history. It's a name that's been associated with a number of companies, and we're talking today because Prophecy Development has a really interesting vanadium project in Nevada, which caught my interest. But John, why don't you go ahead and tell us a little bit of the Prophecy story and how you ended up with this deposit in Nevada after all the things you've done. How did we get here today?
Well, Louis, thank you for the invitation. It's good to connect again. Prophecy Development, we're a company listed on the Toronto Stock Exchange main board. And our flagship project is a project called Gibellini. It's a vanadium project. It's the only large-scale open-pit heap leach vanadium project in North America. And Louis, Prophecy has been around since 2009. I myself, as an investor by background, we've looked at a lot of projects all around the world. And since early 2017, what we realized and lesson we learned is try to learn the lesson and pay the tuition of avoiding politics. And that's why we had wonderful projects in Bolivia, Mongolia in the past. However, it's in the wrong zip code. We took on a chance and acquired this project in Nevada, Vanadium, in early 2017, when nobody else really is paying much attention at all. And Vanadium was 20% in terms of price of what it is today. And really, I think maybe by a stroke of luck in terms of timing that to get to where we are today.
Well, that's an unusually honest answer for you there. What you're saying is you didn't have some great vision of vanadium is going to be the hot metal next year. You saw a project that on its fundamentals you liked, and it just so happens that vanadium took off. Is that what you're saying?
Louis, more or less. Prophecy, we did a lot of M&As, and that's really our expertise in the first 5 years, from 2009 to 2014. We stumbled onto this magnetite vanadium project. It's an iron titanium vanadium project in Ontario, in eastern Canada, and there's a lot of those around. And in early 2017, with board discussion, we say, hey, look, there's a lot of things in our stable. It's a matter of, are we going to double up? Are we going to sell? I mean, nothing's going to stay as where they are. And that's what really piqued my interest into the vanadium sector. I was looking at the sort of, looking into the future of what is this metal what is the future of this metal? And we're going into some of the applications for vanadium. And we thought that, hey, at the time when vanadium is $4 a pound, that there's nobody's producing vanadium for less than that. So it's a matter of time. We didn't know when, but we know that vanadium has a good future from both the supply and the demand side perspective. And that's why we acquired the project. And as I said again, it's purely by luck. Literally within 2 months after we acquired the project, the vanadium price tripled.
Wow. So have the vendors come back and said, hey, can we renegotiate the deal?
Well, Louis, there's one thing we really love. We really have a very, very passionate about operating in Nevada. It's only been our just about 1 year anniversary since acquiring the project. I just arrived in Nevada. This is a jurisdiction, as you know, is the best mining place for mining investment in all of North America, where, especially in the internet age, we don't have to worry about publishing a PEA or a drill hole and having the government or the bureaucrats or the landholder come back and try to restructure a deal. Of course, the locals and the stakeholder, the original vendor, try to sweeten the deal, but this is the United States, the rule of law. So long as we have a good relationship with the locals and the vendors, and they have an NSR on this project, and that everybody shares a common objective. This is just one of the beauty of operating in the U.S.
Yeah, with their NSR, they can't be too happy at the end of the day. If you go and build the mine, they're going to make money.
I mean, you're looking at right now our forecast production 2022 of about just under 10 million pounds a year at a current vanadium price of $21.70. That's $200 million there. 2.5% NSR is worth $5 million a year.
Sure. Okay. Well, before we get into project economics, let's talk about the study of that a little bit. I noticed that the vendors had a full feasibility study on the project. They sold it to you, and then you just put out a preliminary economic assessment. Why did you have to rewind the clock there?
Well, Louis, your question is, why do we go backward instead of going forward? First of all, this project was operated by a company listed on the Ventures Exchange called American Vanadium. Since then, they have rebranded and moved on from the mineral exploration business. They they spent over $20 million in advancing this project from 2011 2016, over 5 years. Half of the 20 million of that, 10 million went into feasibility study, metallurgical study. So they went all the way from drill hole definition, drilling definition, PEA, pre-feas to a feas. And the metallurgical study went from benchmark to pilot to 18-ton bulk sampling over a 6 months time for simulation of heap leach.
Notice that this isn't historical either. We're not talking 1990s or even early 2000s.
Not
so
at all.
It's post 43101. So why did you have to go back to the PEA level?
So, let me answer your question, Louis. It's a bit little winded. The other 10 million went to extensive permitting, which we can talk about. All the baseline studies being completed. The reason we went back to the PEA and not refreshing the feasibility, a couple of reasons. Number one, American Vanadium has gone beyond feasibility. They're into the EPC and the engineering planning phase of the construction, engineering, procurement, construction, and management. So we have the preliminary engineering studies already done with the plus minus accuracy of 25%. It's even more accurate than the feasibility study. So we are going to continue moving on into detailed engineering study, and come with that will be a feasibility study. So the whole purpose of the PEA is really so that Prophecy can use some of the matrix and some of the economics to share with investors. It's not so much into advancing the project. But if you're looking to do a feasibility study, it's 1.5 years at a cost of maybe $1 to $2 million. And that will come with the detailed engineering study, which we're doing right now. And so it's the detailed engineering plan is a sort of one stone, two birds. And the PEA really just to freshen up some of the numbers, updated with inflation, to demonstrate to the investors of what the potential of this project could be.
Okay, so basically, rather than waiting a couple years for the more final numbers, you wanted to go ahead and present something preliminary just because the price has changed so much and the environment has changed since that former study.
Yes, and we're doing detailed engineering studies starting next year, which is what you do typically beyond feasibility study. So we see feasibility studies actually middle of the road. So we're publishing something sort of earlier stage, but we're actually advancing the project at much detailed stage.
It's interesting that you mentioned that. We don't want to get distracted on a sideshow, but recent headlines have brought to fore how some people seem to think of a feasibility study as like carved in Moses' tablets. Well, that's not the idea of a feasibility study. It's not a mine plan. It's a feasibility study that you take to the bank or the funders to show, look, this is feasible. That doesn't mean it won't change afterwards as you get into the detailed engineering. So interesting, and glad to see you doing that work. So when you do come out with a feasibility study, given what you're saying, it's going to be much more detailed than a typical feasibility study would be. So that's interesting. But something else you said also caught my attention. A lot of that money went into the permitting, but in your presentation it says that the permitting is still going to take a couple years. It seems like if the baseline studies have been going for so long, I understand that permitting is lengthy, and I'm not criticizing that, but it seems like a long time for something that started so many years ago with so much money put into it already. Why is that going to take so long?
Well, Louis, you say, hey, so much money and time is going into permitting. How come it's going to take still 2 years? Well, I think, Louis, Gibellini has the largest measured and indicated vanadium resource in the U.S., and that's undergoing EPCM and EIS preparation. If you look at an exploration cycle, I think Nevada, even though it's best jurisdiction to do mining in the U.S., however, it's not for the faint-hearted. The process is on one hand, it's transparent. On the other side, it's costly. If you're just looking at from the first drill hole, from the discovery hole to completion of the go to production, you're looking at about a 10-year cycle. The EIS is probably half of, if you to sort of break it into sort of different categories within permitting, it's quite complex. But the EIS probably, I would say, is probably 70% of the work. So EIS usually take about 2 to 3 years because it's got to do with it's about 20 studies: archaeological, agriculture, air, water. It's the footprint of which you're surveying for raptors, bats. I'm learning flora, flowers, sage grouse, et cetera, et cetera. And this seasonal, and these studies take up to 2 to 3 years. And after that, you're going in, then you're preparing to what they call the EIS. It's called the environmental impact statement. And a lot of times, if you look at the companies like Northern Dynasty, they got bogged down on that. The baseline studies has been complete. However, since the 2014, it's been 4 years, so there's some code that's been changed. So we're working with BLM, which is I'm in Nevada right now. So we have to freshen the baseline studies. That's going to take about a year because of seasonality. And after that, we are preparing right now in parallel what they call the resource report, which will accompany. And once the resource report and the baseline is completed, then we do something. We trigger the notice of intent to prepare the EIS. Now, I think that, Louis, the EIS process is being streamlined a lot in the last 12 months. We can talk about that. But EIS used to be encyclopedic, over 2,000 pages. But now the Trump administration is saying the EIS would be no longer encyclopedic. It will be 150 pages. So from the notice of intent that's being filed to completing the EIS will take about 12 months. Louis, what I can say is a 12-month window is probably as short as you could ever get. Certainly 3 years ahead of our peers in the U.S. And also because vanadium is being classified as a critical metal by the current U.S. administration, given that 99% of the vanadium is imported from adversarial countries in the U.S., that BLM is paying extra special attention to this project.
Yeah, and now it's got an extra tariff on it.
Yes.
So that's interesting. What you're saying is there was some rule changes, so you had to go back and redo some of it anyway. You can't just use the old information. And okay, so that makes sense. And given the usual timeline, and it's a good thing it's on BLM land, is that right? It's not Forest Service?
Well, it's typically in the United States, it's whether private or it's government. It's government land, then it's governed by BLM, which is a federal agency. So we are no different from just about all the vanadium projects out there. So the mineral sits on the public land. That's why we have to go through this EIS process. It used to be very, very daunting. EIS itself could used to take up to 3-5 years, maybe more, but now that's been shortened to just 1 year. So again, we're looking at 1 year to complete in and refreshing the baseline, and then we're going to go straight into EIS, which will take another year.
Sure. Okay. All right. And one more thing on the study, not so much the study itself, but on where you are in the story. I noticed that you also talk about the district potential. It seems like, this could be just the beginning. Is it premature to even go into detailed engineering and study that, or should you be exploring right now?
Well, Louis, you're saying, hey, look, there seems to be some exploration potential. What's your strategy going for? It's really a divided camp, Louis. On one hand, because we have already the largest measured and indicated resource of vanadium in the U.S., which supports mining up to 10 years. If you look at additional resources or reserves adding to that mine life, it's not really adding much to the bottom line. However, we're about 3 years from production, 2 years from permitting, and another year from construction. So 3 years from production. So we're a bit of, on one hand, the dividend seekers, cash flow seekers, really not going to get into the story until we're in the construction or about 12 months away from cash flow. So therefore, I think you can make a case that we should probably be drilling and put out some drill results and sort of cater to a different type of speculator, such as your base and your audience. So we're deliberating on that. We're likely going to do some sampling program followed by a drill program in the springtime.
Okay, and you have the cash in the bank to do that?
We raised $6 million. We still have about $1 million in treasury. The permitting process is quite extensive. So we do have a strong shareholder support, existing shareholders, which owns about 20% of the company. We'll continue to fund the company, but we're looking at maybe a financing towards the end of the year for our program for next year.
Something to watch out for. This was something else that you and I have talked about before, so let's go ahead and dive into this issue. I asked you before an email about how is it possible that you have this advanced project at good grade, heap leachable, all these wonderful characteristics, and it's not in Botswana or Bolivia, no offense, or Mongolia. It's in Nevada, and yet your share price has gone the opposite direction as the price of vanadium. How is that possible? Is it possibly part that people are looking for a financing and nobody's buying until that news comes out?
Well, Louis, I think first of all, your question is the best jurisdiction. It is really the only proven project that can go under open pit heap leach. It has the largest measured indicated resource in the U.S. and it's the fastest, the most advanced project in sort of permitting and bringing the product to market. Why is selling at such a discount? When we acquired the project, it was announced in June, and we raised 6.4 million. We did a $6.4 million financing. That was closed in October of last year, just a year ago. And at that time, Prophecy had 5.5 million shares outstanding, and we issued 2 million shares. So that's almost 40% of the float. I would just say it's probably three main reasons for such a disconnect in the valuation. First is liquidity. Because Vanadium, by and large, is still, you're one of the very few analysts cover Vanadium. There's not a major investment banks or analysts that talk about Vanadium. And even the only vanadium producer listed on North American exchange, Largo, its trading volume is not reflective as its market cap potential. It's over $1.5 billion, but it's trading something like $3 to $5 million a day. So the junior in the mining sector is not leading it's actually lagging the vanadium price. It's not leading. And even in the case of Largo, this time last year, Largo was on the verge of bankruptcy, right? But the last quarter, they made about $80 million in cash flow. So I think it's a matter of liquidity. And then secondly, as I mentioned to you, it's about our share structure that because we issued almost 40% of our shares outstanding just a year ago. Unfortunately, some of that went to, for lack of a better term, day traders. I have nothing against them, but it's just a matter of just the nature of who they are. And then we had at that time only 7.5 million shares outstanding. So the share was very, very tight. We did 100 to 1 rollback. So those confluence of factors, and then we listened to the shareholders. We split the stock 10 for 1. So now we have 78 million in June, and that just provided an opportunity for them to divest themselves. So therefore, you're looking at fairly good liquidity. But these guys started selling when the stock was on a post-split basis 50 cents, and now they're so it's some to do with that. So it's a combination. Just Vanadium is not so well known, and now we issue just 40% of our flow. That really sort of put a ceiling on our stock.
Okay, so then the natural follow-up question is, when does that change? Do you think just ongoing vanadium prices rising will help, or the financing putting that question to bed, or when if I'm a shareholder now thinking about buying your stock, and I'm looking at it going down while vanadium's going up, I'm thinking, why do I want to catch a falling knife? So what's going to change that, John?
Well, Lucy and I have been around. I've known each other for a number of years. In the end, it's that Warren Buffett or Benjamin Graham said, in the short term, the stock is a voting machine. The long term is a weighing machine. I've now made a habit of not just speculate or forecast the stock on the price, but I would just say that, hey, look, as a successful trader, investors will be very happy to getting a 20%. For myself, I'm happy to getting an investment 20% from the bottom and sell 20% from the top. And look at our valuation at $10 million a year. We have no debt. Insiders own over 20% of the company and are committed to see the companies through. It's the single largest investment for myself. That I would say we're probably close to the bottom and close to the top. And if you look at the trading, the company is trading it's trading at about 10%, changing hands, 10% of the float on a monthly basis. And if you exclude insider and close associates or directors, which own about 40% of the stock, then you're looking at 20% changing hands of the float, right? So at this rate, it would take less than 4 months to basically reconstitute our entire shareholders outside of the directors and management. And the phenomenon of anonymous selling has been going on for about 3 months now. I would just say in terms of value and fundamentals, I can quite confidently say we're the single best value in the vanadium sector.
Okay, and you mentioned it's your biggest position. Do you mind saying how much of your own cash you put into the play?
Yes, I myself, just in the last 4 years, it's all public knowledge. I funded this company prior to the $6.4 million financing. I put in $3 million cash into the company, and the average cost is about $3.50, 35 cents, and the current.
So you're in there with the shareholders who've been there long term.
Absolutely. My average base is 35 cents. There are some options warrants outstanding, but nothing under 20 cents. And majority of them is between 40 cents and 80 cents.
That's very interesting. Okay, so let's then, last area that really comes to mind as an investor asking questions about this. If it's going to be several years of permitting and construction before we get to cash flow, how solid is the vanadium price? I mean, right now it's a great flavor of the day. The momentum is upward, it's up and up. But it's a small market, and there are other people that have vanadium deposits out there. There's some very large ones. that could come to market? Is there a chance that the price increase we've seen goes away before you can get to cash flow?
Well, Louis, you're asking about the fundamentals of vanadium, and it's going hot right now. But what's it in the future? Louis, the way I draw, and I've read a lot about vanadium, and we do a lot of research. We have, as you know, China account for 60% of the vanadium production supply, and all of the black shell vanadium projects, all of that supply coming out of China. So we have a technology partner by the name of NWME. They're a multi-billion-dollar state-owned enterprise, and we are very bullish on vanadium, and we think the game has only gotten started. For both on the supply side and the demand side. If you look at the supply side, just to talk about supply side, the key driver of vanadium last year when it went from 4 to 12, and now it's over 20, it's more than 500% in the last 12 months, is China upgraded their rebar standards. So it used to take about a pound of vanadium to go into a ton of steel, 0.4%. Now they're doubling up from 300 grams to 600 grams, and that is not going to change, because even though 600 grams of vanadium per ton of steel might seem still a little, but if compared to the North American standard of 1 kilo a ton of steel, just to protect and to fend off the earthquakes and the floods. So you can see a lot of upside, even just to, these vanadium rebars are not going to some exotic infrastructure. It's go to everyday high-rises and skyscrapers. And I think this is where Rick Rule maybe got the notion incorrectly when he was talking about vanadium. So therefore, if you look at where 90% of the vanadium go to rebar, and the rebar consumption is going to go up and not go down. And literally half of the Chinese production used to be destined for export, and all that production all that supply is withdrawn from the market. And that's why you're seeing right now there's literally no supply. Everybody's scrambling for vanadium supply. Then you add on the other aspects of vanadium. This is why Robert Friedland called it the miracle metal in the aerospace, because vanadium has the very specific molecular structure that can compact the steel. So therefore, vanadium not only strengthens the steel tensile strength, but reduces the weight by up to 30%. So you can get anything that flies that improve the fuel economy. So all the aerospace, all the jet missiles, missile casings, aerospace travel, jet engines, aluminum composite bodies, all require vanadium. So that sector is going to grow. And then you look at the third areas of growth of vanadium application is the battery business. And you can read all about Robert Friedland talk about vanadium batteries, how it would not degrade over 20 years, ideally suited for the solar and the wind, which now today constitute over 700 gigawatts of generating capacity. So that's the supply side. Let me finish on the supply side. And then if you look at supply side, and there's a lot of sort of third-party research available by Terry Pearl of TT Squared. They are based on public information. There is not another vanadium mine, greenfield, coming to production in the next 5 years, Louis. And if you look at some of the existing mines from South Africa and also from Largo, they're talking about upgrade of 50% increase in their production by 2020. And that would account for less than 10% of the global supply, the actual increase. And from China, because of the environmental standards and also reduction in steel capacity, you're not going to see more supply coming out. And even if they do, on the demand side I already talked to you about, the internal domestic demand is going to more than absorb whatever excess supply coming out in vanadium. And I don't think that Chinese production is going to go up. If not anything, it will flatten and even go down. So what we see is a perfect storm, much akin to 2006, as you recall. At least I know you're bullish on uranium. Recall that Chinese, because they see the growth in year 2000, 2002, they need electricity. And what they did is they went on a rampage of building nuclear reactors. By the time they got commissioned in 2006, what they found out, there's no uranium, right? Uranium price went from 5 to 100, as you know. And what came to save the day was Kazakhstan that created the in situ leaching and now account for over 30% of uranium production. However, in case of vanadium, I don't see that Jesus coming to rescue, because vanadium, through steel production, which is 80% of the steel byproduct, which is 80% of vanadium production, it's a very dirty process. And in the case of the United States, Australia, or Canada, you're not going to permit a furnace or roaster. due to environmental restrictions, which really sort of, and then if you look at the sort of black shot deposit, there are just not that many outside of China. And you're looking at a perfect storm in terms of very restricted supply. And you're looking at a steady demand from all sectors, from rebar to aerospace to chemical. And still on record, I would not be surprised if Vanadium make a run at $30, $50, or even $100 a pound.
You're supposed to wave your arms when you say big numbers like that. Well, that's interesting. The takeaway for me there is that you're very bullish on vanadium just on the traditional uses. The steel, the rebar is not going to reverse. That's a one-way change, and it only goes up from there. So if the battery thing happens or not, it still goes up. But if it does happen, it goes up even more. Is that?
Absolutely. Right now, there's no inventory of vanadium. Vanadium is traded both in China and Rotterdam. And our Chinese sources are telling us, and they've been producing vanadium for the last decade. They have their fingers on the pulse. When we visited them in June, they have stopped taking orders from customers. Customers are wiring money in full amount to their account to lock up the price and put their place in the queue. In June, they were taking orders up till 2019. They just basically say, hey, look, we cannot do this anymore. And we don't see that trend to reverse, Louis. And when I ask specifically who's using this, who are their customers, they're saying all across the board. And as vanadium application, actually demand is actually more applications are getting discovered on a frequent basis, and they're telling us, the Chinese army is importing a lot of vanadium for catalysts, for some of the very high-tech alloys. So you're seeing really in the future, as Jeff Bezos said, you want to lean yourself into the future. The future is distinctly vanadium. You're not going to see people use less vanadium, but a lot more vanadium in the years and decades to come.
Well, that's very interesting. I'm going to have to look it up to see if Robert started writing about vanadium or talking about it before I did. Not that I'm competing with Robert Friedland, but just out of curiosity, it'd be good to know. Okay, so those are very good answers to my questions. Let me one last one. You still have some remnant or legacy properties in Bolivia, other places. Are you going to do anything with that or seek to monetize them, backburner them, just focus on the vanadium, or what's the strategy there?
95% of our time is on vanadium. We have a dedicated team in Nevada, spearheaded by Michael Drode, who is a VP of operation. We recruited from Barrick, and he took a 50% salary cut to join us because he lives in Yelko. He doesn't want to go to the Dominican Republic anymore for their Pablo Viejo project. And he is 30-year veteran. It was the chief metallurgist for Gold Strike, which is the largest gold largest gold mine in the United States. 30-year metallurgist, and the project is in very, very good hands. Our project in Mongolia and Bolivia are fully permitted, and the one in Bolivia in particular, we could have some good news by the end of the year, as our license is undergoing rectification, much a bit like Romania, because the license was granted several years ago. So we could be getting green light very, very soon. It's a wonderful project, had a feasibility study, very high grade, but they're very low maintenance. And I would just say there's optionality to this company. But by and large, we can go into some of the details on the PEA. The project as of now, because of $21 vanadium, we had a 50% after-tax IRR at the base price of $12. At today, comfortably, the project comfortably is over 100% IRR and over $1 billion in NPV, with particular emphasis on the capex, which is only less than $120 million to get started.
Yeah, I noticed that. Those are incredible numbers. The time frame for construction is pretty aggressive too. Is that just because the simple processing, heap leach, and you think you can build that in less than a year?
Well, let me spend a couple of minutes just to give it an overview of our proposed operation. You're absolutely correct. 12 months to 18 months is quite standard. We have a neighbor, Northern Vertex, that just commissioned a gold heap leach project to production. You're looking at literally moving Gibellini, which is a heap, from one heap to the next heap. And because the strip ratio is 0.17. So you literally can start moving. As soon as we get the permit, we can start moving rocks from one heap to the heap. You put lining, you collect the pregnant.
Sorry, would it be run of mine?
It will be, when you say run of mine, meaning?
Just blast it and put it on the heap pad, or do you have to crush, or?
Well, we will have an in-pit crusher, and then we'll have a conveyor belt literally truck and then going downhill for about 3 kilometers, putting onto a separate heap. The heap has linen at about 5-degree angle. You collect the pregnant lead solution. Then what I go through is very, very standard solvent extraction like you do for copper, and which from there we don't do the electrowinning, but rather we do the chemical precipitation. Vanadium share a lot of commonality with uranium. So you have uranium oxide variant as a yellow cake. In the case of vanadium, what you get is vanadium pentoxide, which is yellowish powder, very much like uranium. So therefore, you look at very, very low. We're absolutely the lowest mining operating costs, the lowest operating costs, and the lowest capex. The capex are literally just the cost of solvent extraction. We don't have any particular items is over $15 million. So all the combination of that, and we're moving rock about 7,500 tons per day, which is really not a very sort of strenuous exercise. And Louis, we invite you and maybe some of your accredited shareholders for a service at any time. Excellent infrastructure. 5 kilometers from Highway 50, we actually have a Highway 370 running 2 kilometers through it. We secure water 5 kilometers away and power. So our infrastructure cost in power, in water, in road is less than $5 million.
Sorry, on the power topic,
yes.
John,
Yes.
since you've got that long belt, would you be able to generate electricity off it?
Long belt meaning?
The belt. If it's a downhill for the
Yes.
ore on the belt, there are projects where they use the belt to generate electricity for the project. Would you be able to do that?
Yeah, it's not a steep slope. It's very flat terrain, and the Gibellini Hill itself is only about 20 million tons, fairly gentle, about 20 to 30 degree incline. It's a possibility. And secondly, if you were to drive from Vegas to Nevada, you can notice a lot of solar farms, huge solar farms, and you ask yourself, hey, look, there's a huge solar farm on the left side of the highway. What's to stop us going from the right side of the highway, or literally extending indefinite infinity? We have 28 square kilometers of federal land. We definitely are very interested in getting some solar plants getting started, and then the use of vanadium batteries.
And you know what kind of battery you'd get, right?
There you go. There you go. You couldn't find a better jurisdiction. I mean, Elon Musk's solar plant, Solar City in Reno, which is where I'm at right now, is only about 2.5 hour drive from Gibellini.
Very good. Well, you've been a very good sport with me asking you, some pretty poked end questions there. Anything else you want to tell our viewers?
Well, I think, Louis, we touched on a number of points. You asked about why that there's the disconnect, and we talked to you about, I think vanadium is a new coming sector. And the notional value of vanadium is actually not that small. You're looking at 200 million pounds a year of vanadium pentoxide per year, and about 20. It's a $4 billion market. So it's about a quarter of the silver market. It's not that small market. It's about the same size of lithium in terms of trade, in terms of consumption value per year. So I think that's going to catch on. And we talked about the shareholder structure. We think it's a temporary phenomenon. And the insider, including myself, is buying at double the current price in the market, as well as participating in the financing. I just want to touch briefly on the very last point, which is a lot of questions being thrown at us, and also some of our competitors from our peers, is our grade for vanadium is low. We're looking at about 0.3% vanadium compared to, say, the Largos or some of the magnetite deposit, that's over 1%. And also even to some of the black shell vanadium deposit in this belt, which is run over 150 miles north and south. There's a lot of exploration potential, but their grade is probably double ours. So there's a lot of sort of questions say, hey, look, if Largo is 1%, 1.5%, you're reading at 0.3, how can it be economic? It's important for your readers and your audience to distinguish, first of all, the difference between black shell vanadium versus magnetite, titanium ferrous, vanadium. The way to process those are completely distinctly different. You go through, in terms of magnetite vanadium and titanium vanadium, you go through the standard smelter furnace. So depending on the melting temperature, you separate the vanadium from titanium and from iron, and then you produce a titanium slag, you produce a vanadium slag with iron. And then thereafter, you go to the refinery and you go through that extensive process that costs, very energy intensive, very large carbon footprint, and very pollutive. And this is where 90% of vanadium is produced as a steel byproduct. So you can't really compare sort of apple to apples. But even within the black shell vanadium, and we're becoming sort of an expert in this area now because of a Chinese technology partner. And we spent 2 months in China. Our Chinese, the black shell vanadium as a whole, including as you mentioned, David Terry, which is actually I've known him for over 10 years. There's black shell vanadium is just really a basket name that includes everything else but magnetite. So you have a magnetite, and so you have this one that's associated with heavy oil in the Athabasca region in Alberta, and then also you have a lot of them associated with some associated uranium in the Colorado Plateau and also in Argentina. Potentially, that's the case. So there's probably over 100 different varieties of what they call the black shell vanadium. And the reason they call it black shell because there's sometimes often carbon associated with it. So literally you will see carbonaceous black shell vanadium, but majority of that is sulfide. In fact, when the Chinese partner visited us and they're the authority in black shell vanadium, they look at us and they say, John, what you have is one of a kind in the world. There's invariably some degree of oxidation in all these vanadium projects, especially if they're on surface. However, all of Prophecy's measured indicated resource, that's including our mine plan, are oxide and transition ore. So what means is there's been a lot of thermal alteration events taking place already that's broken down the vanadium minerals from the sulfide into oxide, into what they call the independent vanadium minerals. Much akin to, David Perry is talking about you're panning with water, right? You can leach that solution out. For us, we are using sulfuric acid, the same grade used for copper heap leaching, that we're able to precipitate and dissolve soluble vanadium minerals into these acids because we have a very low deterrence elements, and we have very high degree of vanadium oxide that's independent vanadium minerals. So far, we've looked at a lot of vanadium projects out there, and we invite you again, Louis, to do all the due diligence. We have extensive metallurgical studies that also being validated by the Chinese recently in June, that we're the only guy out there that can actually do this heap leach and achieve over 65% recovery. And another quick way to analogous to look about is Louis, as you know, the process to extract a gold or copper sulfide is very different from heap bleaching from oxide, and there's not a lot of gold oxide out there which you can actually mine and process economically for 0.5 gram. Same case for copper oxide, you can leach copper oxide gold SSW for 0.1%, right? So the way that I look at it is really to compare Prophecy's oxide project with that of copper in southwestern U.S. belt, because we are 0.3% vanadium, as you go through the exercise with David as well, Terry, that we have 0.3 vanadium after 65% recovery. We have, before recovery, 6 pounds of vanadium in the ground. After recovery, about 4 pounds of vanadium in the ground. Then 65% recovery. So 4 pounds of vanadium at $20, that's $80 a ton of ore after recovery. Then you're looking at heap leaching, about cost of assets about less than $10 a pound, mining less than $5 a ton. So all together, you're looking at less than $30 all in per ton of processing cost and mining. And we couldn't find anywhere. We don't see any hidden skeleton in the closet to try to really ramp up that number substantially. So therefore, you're looking at almost $50, more than $50 of revenue, cash flow, and at 3 million ton a year, that's $150 million before taxes. And with the Donald Trump's tax policy at 21% corporate tax, we're looking at cash flow over $220 million, which covers more than capex. That's how you get to that $120 million.
Okay, well, you get kudos for bringing up the grade. I probably should have done that, and perhaps I didn't, because I looked at that, I looked at the study, and I thought, well, very low strip ratio. Basically, it's just sitting there on the surface.
Yes.
And heap leach, and for those reasons, the grade didn't twig as necessarily a problem, because those are the kind of dynamics for a bulk tonnage, low grade bulk tonnage project. So, but it's good that you brought it up, and you get points for bringing up the grade, and also for being so open to due diligence trips. We'll have to follow up on that. Okay, well, thank you very much for your time. Very much appreciate it. You've been a good sport, and we'll talk soon.
Louis, thank you very much for the invitation. Stay in touch. Have a great evening.
You too.